So yesterday we went through starting up Adam Home Health LLC. At this point in the game, we have a company, we have our licensing. Wanted to talk through real quickly just some of the government regulations that we have to live up to as far as being a business is concerned. We mentioned yesterday that you would obviously still have your own personal income tax return to file every year, but as an employer, you have a number of taxes that you have to keep track of and pay. First on that list is your IRS payroll taxes. So every time we give you guys a check, right, we write out a check, you'll notice one of the line items is the money that we withheld from your check to pay your personal income taxes to the IRS, right? Every year you fill out a W-4 form that says how many dependents you have, etc. That's one of the ways the government controls how much money comes out of your paycheck. So instead of at the end of the year you writing a check to the government, they're a little sneakier than that and just take it straight out of your paycheck before you even know about it. Keeps the riots down that way. Well, anyway, we're responsible, the business is responsible for taking that money out of your pay, and the business is also responsible for matching that. You have your income tax, and then there's also a employment tax that you pay and that your employer matches to a certain extent. So after we pay out your checks, depending upon the size of the business, you have to then turn around and file that check or file a payment with the IRS. We have to do that like 3 days after you get your check. So you get a check on Friday, by like Monday or Tuesday morning, we have to go online and pay not only what we took out of your check that is technically your money, but we also had to take out your portion of employment taxes and our matching portion of employment taxes and pay that into the government as well. Then once a quarter, so every 3 months, we have to file a report that tells them how much money we've paid into the government over that 3-month period. Once a year then, in January, we have to file a 941 form with the IRS that says what we paid in for the entire year, or a 940 form that says what we paid in for the entire year. Okay. In addition to that, you have unemployment tax. Okay. If for some reason any of you are unemployed, you can generally qualify for unemployment compensation while you look for another job. In order to pay for that, the businesses have to pay in a percentage of their wages to the government to pay for this, the checks that would go out to people who are unemployed. So every quarter we pay in for that, and once a year we have to pay and reconcile unemployment tax with the federal government and with the state of Texas. So you end up paying 2 unemployment tax, state unemployment tax and federal unemployment tax. So you'll see that as SUTA and FUTA sometimes on your payroll stubs. In addition, in the state of Texas, we have a business tax that's called a franchise tax for LLCs that we have to file once a year. So in May, every LLC has to file a franchise tax that states what our revenue was, some of our expenses, and then we pay a percentage of that into the state of Texas. Evidently, the state of Texas is actually unique in the lower amount of franchise tax that's required. If we were in California, in addition to all of that, we would still have state taxes, state income taxes, and a number of other taxes on business that are required. In Texas, generally the ones that we've covered are the ones we have to deal with. As a home health provider, there are a number of licensing requirements that force us to file additional paperwork. For instance, with Medicare, as we receive payments, once a quarter we have to file the Medicare credit balance report, which basically tells Medicare if they've overpaid us any money, and we're supposed to return that money back to them, obviously. Once a year, we have to file a Medicare cost report, which effectively says how much money we earned in a number of different home health categories, what our expenses were. We send that into the government, and they use that to compile metrics for the entire industry, which eventually go into policy that controls how much money home health agencies will get paid under the Medicare program in the future. So for those of you who have seen the rules that affect home health, they come out in what's called the Federal Register, right? So Congress makes laws, haphazardly it seems. In the state of Texas, our Congress meets once every 2 years. At the national level, they meet throughout the year. They make laws. Laws concerning health care are generally a little vague. Those go to the DHS, it trickles down to CMS, Centers for Medicare and Medicaid Services, who will make policies or regulations that affect how home health agencies actually operate. Administrative agencies like CMS, you've heard of OSHA or the FCC, right? All of these government entities that control or run different segments of our nation, like transportation or communication or healthcare. Those are called administrative agencies. They enact the laws Congress makes. So Congress says we need to reduce spending in healthcare by 8% over the next 10 years. CMS would be responsible for kind of carving out how that's going to happen. So you saw in the state of Texas a very similar situation this past year when Congress said we want to reduce Medicaid spending in the state of Texas. The Health and Human Services Commission proposed that those reductions come out of pediatric therapy services, right? Pediatric therapy providers then had to sue HHSC to say that those cuts were unfair. HHSC is in this weird situation of having to enact the law as Congress gave it to them, saying there has to be this reduction, percentage reduction in the budget, and yet they're under a court order not to implement it the way that they tried to implement it originally. Okay. Well, the way they implement rules at the federal level, they will CMS creates proposed regulations or proposed rules. They publish those in a book or quarterly called the Federal Register. You can get those online. It's a federal publication. I think it actually comes out once a week, but it lists out all of the proposed or final rules for different administrative agencies at the federal level. So you can pick up a Federal Register and read the newest FCC rules. You can pick one up and get the most recent home health rules. So usually once a year they will publish proposed rules for home health agencies. Administrative rules require them to publish proposed rules so that people can then put in their comments. And people who have an interest, like Adams Home Health Agency, may send in comments saying, if you enact this rule, we're going to lose more than 5% of our revenue, or this isn't fair, or it seems like this rule is arbitrary, or maybe you didn't think about when you implement this rule, it's going to require us to, you have a proposed rule that says we have to have a face-to-face encounter form signed by a doctor that has to be filled out by a doctor before we can receive home health payment. Somebody may comment and say, if you enact this rule, it unfairly burdens a home health agency because now we're at the mercy of a doctor's medical record that we don't control, okay, which is a situation, in fact, that happened. When you read through the Final Register, a few months later, they will publish the final rule for home health. So the requirement is that they publish the proposed rules, they listen to comments, they respond to comments. There's actually not a rule that says they have to do anything about those comments. And so most of the time, the final rule written in the Federal Register will contain 300 pages of comments and replies, and if you read it, usually the reply is political enough to say, we took into account what you're telling us, and we're going to ignore you anyway and implement our final rule. Then you'll have 20 pages of actual rules that go into effect at the federal level at CMS. So every year for a home health agency who's Medicare certified, we have to look in the Federal Register to find out what the new payment rates are going to be for our Medicare episode, what the cost adjustments are going to be, if they've changed the wage index factors, if they've changed the case mix weights, right? If they've implemented new OASIS items, you name it. All right, so we have to keep track of those. Because we are under the requirements of each individual payer source, if we wanted to admit a Blue Cross patient, Blue Cross Blue Shield of Texas patient under their HMO plan, we have to abide by the rules of Blue Cross Blue Shield for reimbursement, right? Because they ultimately make the decision of whether we should get paid or not. So we have to learn their rules. If we wanted to accept a United Healthcare patient, we have to learn UHC's rules. If we want to accept pediatric patients, we may have to accept Texas Medicaid traditional program and their rules, or we may have to accept Medicaid managed care like a Superior or a Bravo plan. They all have to, of course, live by federal and state laws, but they also can create their own policy, which is why when we build software, people call in and say, we're getting denials from Blue Cross because we're not sending this particular field on a claim. And sometimes that is a field that's not required by federal law, and it's a policy decision made at the individual plan level. All right, so we have all of those rules that we have to follow on a continuous basis. All right, so let's look real quickly when we're running a business at the things we have to do home health-wise on a weekly, monthly, quarterly basis. See if we have these together. All right. Daily, a home health agency is going to effectively just run its operations, right? Every day we're going to intake patients, schedule for our clinicians, resolve complaints or problems, conduct billing activities, day-to-day operations. All of those you can find in our Compliance Complex book, or look through our software and see things that the software has available to it. Weekly, in general, we would have payroll and its associated payroll taxes that we have to pay. A lot of agencies will conduct weekly billing and collections, especially PDN companies that want to, in their instance, they bill weekly because they have multiple services occurring for the same patient on the same date of service. Meaning you may have a shift that begins at 8 in the morning and ends at noon, another shift that starts at noon and ends at 8 at night, another shift that starts at 8 at night and goes to 8 the next morning. If they were billing continuously, there's a high probability that they may have 2 of those shifts ready to bill and the third not ready to bill. And if they bill the first 2 shifts and then come back later and bill the third shift, because it's on the same date of service and the same type of service for the same patient, many payers will deny that third shift as a duplicate because you don't send times on a claim, so they don't know that you're not resubmitting the exact same service all over again. Okay, so they will bill on a weekly basis so that they have time to get all 3 of those shifts in and confirmed and validated and ready to bill, so that when they bill, they have all 3 shifts that get combined into one line item on a claim for the entire 24-hour period of time. So if you have questions about that, it's generally a Medicare agency can bill on a daily basis because they bill per visit, and they don't have overlapping services. PDN will tend to bill on a weekly basis and conduct collections on a weekly basis. Typically, a home health agency would have a marketing meeting once a week, different operational meetings, a clinical, so a marketing meeting just to kind of get an idea of what your marketers are doing for that week, a clinical training or case conference where your clinical team comes in and talks about the patients that they're serving or conduct some type of clinical training. Generally, orientations for new hires would be conducted on a once-a-week basis. If you have a company that's growing fast enough where you'd have multiple new hires coming in, you would generally want to stage those so that you're conducting one orientation class a week rather than one orientation per new hire. Medicare home health agencies will also typically send their OASIS files to the state once a week. So you conduct OASIS visits during the week. One time a week, they generally compile those and will transmit those to the government. All right, monthly. Most companies, especially home care companies, will conduct financial reporting once a month. That would give them their AR, their revenue for the month, their profit and loss for the month, their payroll cost for the month. Okay. Typically, people who are using our system will run those reports, which you can get out of our Quick Consultant. They would then input those into their financial system like QuickBooks so that they can get an accurate picture of how much money they've brought in, how much money they've spent for the month. They would combine that with the information they keep in QuickBooks, like their lease payment or their car notes for the company, their insurance cost, etc., and have a full picture of their financial capabilities. Once a month or once a quarter, they would generally plan out a marketing campaign. Again, I'm trying to give you guys an idea of what a great home care agency would look like. The vast majority of home care agencies are very haphazard in any type of marketing that they do. They would typically hire a marketer and just send them out and expect results. The best are going to have a marketing campaign meeting at least once a month. Once a month, they would conduct their HCAHPS reporting exports. These are the surveys that Medicare requires home health agencies to, I would say requires them to do, but technically they require them to be outsourced. We will send a list of our patients with their OASIS responses to an HCAHPS vendor like Data or SHP, who will then call these patients or conduct some type of survey to find out, to get metrics about the quality of their care. That has to be done on a once a month basis. We would want to do our QAPI monitoring of specific metrics. So weekly we're doing these audits, or daily we're doing these audits of clinical records. Once a month, our QAPI team wants to at least do a cursory review of some of those trending metrics. You'd want to have some type of employee meetings just to make sure everybody's on the same page. If they sell any type of physical assets or anything that would require sales tax, they have to file sales tax reports once a month. Of course, you have your Medicare overpayment report that we talked about. I think that's actually quarterly, and management meetings. All right, quarterly operations, we would have our PAC meeting. It's our Professional Advisory Committee. That's where we would bring in our physician, who is like a medical director or a consultant. We would bring in members of our clinical team to discuss at a management level how the agency is operating. They would review the QAPI reports, they would review incidents, they would review the financial side of the company, see how things are progressing. You would have your QAPI committee meetings, which is where your quality assurance team not only reviews the audits and incidents, but also creates a quarterly plan for improvement. We would have another marketing session, strategy session, that sets up our marketing strategy for the next quarter. And then depending upon the size of our company, we may have to file extra payroll tax forms for the quarter. In addition, monthly, we would also need to check the OIG exclusions database on all of our employees. For Medicare, if a person has been in trouble with the Medicare program, they've committed fraud or they've gotten in some other type of trouble, Medicare excludes them from participation in the Medicare program, which means that if they effectively work at any company that bills Medicare, that money is subject to recoupment. So once a month, we would run a check against the OIG exclusions database to make sure none of our employees are on that list. If they were, there's virtually no way for that employee to actually work at our company without us losing out on our Medicare reimbursement altogether. There are some very, very limited rules, but it's virtually impossible to meet them. So when you're excluded from the Medicare program, you're effectively out of health care altogether. But that check has to be run once a month. If you're a PDN or pediatric therapy company, and even to an extent a Medicare company, you would at least once a month want to run eligibility checks on all of your patients. Because patients, especially government patients with government contracts like Medicare and Medicaid, because they tend to switch back and forth between having Medicaid as a primary insurance and some type of private payer like Blue Cross, we have to check to make sure that they're still eligible with whatever payer we're going to be billing. For instance, if a patient switches from traditional Medicare to a Medicare managed care organization, not only do we have to bill different insurance, that's effectively a new admission for that patient. We have to discharge the patient as a Medicare patient and do a brand new OASIS as a Medicare managed care organization. If they switch back to Medicare, we have to do the same thing all over again. But we wouldn't know that if we don't check eligibility frequently. We wouldn't know that until we start getting denials on our billing for no eligibility. And then to an extent, we also have to verify licensing on a monthly basis. That would be any of the HR documents that are required for you to work here. Meaning if you're a nurse, once a year or so your license expires. I guess probably once every 2 years your license would expire. You're going to have continuing education credits on a yearly basis that allow you to maintain your license. You have things like, I guess, tuberculosis testing and flu shots. You have car insurance. If you're a home health worker who's going to be driving around, you'd be required to have car insurance, your driver's license, a number of other licensure requirements that we would want to check our HR department checking on a monthly basis. All right, back to the yearly operation. So every year we would have to have our governing body meeting, which is where our board of directors or the board of advisors for an LLC would have to meet to plan out the activities for the agency for the entire year and to review all of the activities that have occurred over the past year. We recommend that those actually occur on at least twice a year basis, but depending upon your how you're accredited or licensed, you have to do that at least once a year. Most companies, not just home health, but most companies who really want to do things right also do a one-time a year audit. Okay, in our case, I would want that to be a legal audit where you have an outside consultant or an outside attorney come into your agency to review your charts and your operations to make sure that you're living up to the legal requirements, that you're not that you're protecting yourself against lawsuits, that you have the correct legal protection in place for your agency for the coming year. You would want a financial audit. This would be like a CPA firm coming in to check your books. That's beneficial because especially not especially at small companies, but at all companies, there is a significant risk of people stealing money from you, especially in your payroll and your accounts payable and accounts receivable department. As a small company, it's typical to have one person responsible for getting those checks in that you receive, like from Medicare, or if a patient writes you a self-pay check for $200, that typically goes to one person. At a small company, that same person is generally responsible for documenting that information in QuickBooks, right, to say that you received that money. That person is usually responsible for depositing that money in the bank, and then once a month reconciling your bank statements against QuickBooks, right? That's part of that monthly financial reporting. You would reconcile your bank statements against your accounting software to make sure that they reconcile down to the penny. In a small company, if one person is responsible for that, this is a little outside of our training, but it's good knowledge for you guys to have. It would be very easy, and this happens a lot, for a patient to write a $200 check to the company, and the person who's responsible for it will simply write their name on the check and deposit it into their own account. They don't get caught because they also can go into QuickBooks and take out that patient balance altogether, so it never shows in the record, right? Then your books still reconcile, but as a company, you're $200 poor. And you'll see that a lot in business. That's why it's universally recommended that you have two people responsible for financial transactions in your company. The person who receives and deposits the checks cannot get into the system to input that information or to manipulate your accounting software. And again, it happens a lot. As a matter of fact, just about a year ago, I was talking to a lady who works at a small office. When they finally had a CPA firm come in and reconcile the books, they noticed some inconsistencies and found that at their office, a lady had stolen like $150,000 over the past 5 years doing that exact thing, right? And so once a year, you would want a CPA firm to come in and do a financial audit. You would want a consulting company to come in and do a compliance audit, right, to review your charts, to review your incident reports, to oversee your QAPIT, just to give you an outsider's perspective on regulations and making sure that you're living up to them. I don't know of any companies out in healthcare, or at least in home health, who do this, but I would also recommend a once-a-year technology audit, meaning have someone with fresh eyes come in to make sure that your technology is secure, that you haven't been breached, that your passwords and things are secure, right, that you don't have viruses or bugs on your computers, that you don't have unauthorized access to your network. Generally, once a year, we would also endeavor to conduct our payer contracting. With Medicare and Medicaid, we generally don't have to worry about this, but with private insurance, we can negotiate individual contracts with them that say what they're going to pay us for different services, and those generally renew on an annual basis, so we would want to prepare for that. Most companies don't. Most companies will try to get a few payer contracts and then they forget about it and just take whatever it is that the insurance company offers. Smart companies will do a monitoring and evaluation of what they've been paid by that company, that insurance company. For instance, we would run a report for all of our United Healthcare patients so that we had metrics that show here's how much money we received, here are our expenses, what we had to pay out for those patients, here's what conditions those patients had, and here's the improvement those patients had, and then take that to United Healthcare to show them, this is why we deserve $5 more per visit, or we can't operate this next year under the same agreement that we had last year because we lost money even though your patients improved. Right? Again, I don't really know of any companies that take it to that level. Hospitals are pretty good about it, but home health agencies almost never. But it is a great strategy to implement. Every year we would also want to have, either as part of our governing body meeting or as a leadership meeting, a strategy session that sets up how we're going to operate each year. Most companies will also conduct employee evaluations formally. We like to do employee evaluations just all the time, right? So if you're a douche and you have to put money in the douche jar, you get that feedback immediately. But yearly, we would want to do a formal evaluation so that you had something in your record that gives you good feedback or negative feedback. There are a couple of benefits to that. One, unfortunately in business, you have to let people go, right? There are people who just don't fit the culture of the company. There are people who just don't have the skills to benefit the company. And as much as you may like people, right, there are people who just don't have the necessary competencies to work in a particular division. Now, I think like really good companies will try to move people into different areas to fit their strengths. And I think we do a good job of that. We really want to utilize people's strengths and not focus on their weaknesses. But unfortunately, right, there are situations where you require some baseline competency that has to be met that is either met or not, okay? And of course, there are those times when there are people who are just pains in the ass, right? They're disrespectful or rude to customers, or they steal from you, right? There are some absolutes that have to be grounds for termination. When that happens, in any of those situations, you want to make sure that you have documentation showing that, right? As a leader, you want to make sure that you never have to enter a situation where an employee is let go or terminated without them expecting it, right? Best case scenario is that it's something that's a win-win for both of them, right? Like they know they don't fit, you know they don't fit, and they've been struggling, and so terminating that is honestly a way for them to find a job that fits their skill set better. It doesn't always work out that way. You know, unfortunately, there are a lot of situations in life that just aren't that clear cut, but you still would want that documentation showing that, you know, you met with them, you counseled with them on different poor decisions or lack of competency, you tried to remediate that. At the end of the day, let me just say this kind of as an aside, because I expect you guys to be leaders and to be able to teach other companies these principles. The reality is, if you allow mediocrity, that's going to affect the great people that are on your team, right? So again, no matter really the situation, there are people out there who have the mindset that, like, you know, this is business, it's all about making money, and if that employee isn't the maximum profit maker, then you need to find somebody who is. That makes sense, and I really can't argue against that from a business perspective. From a personal perspective, right, there still has to be the reality that giving someone a pass means you're also letting the people who are great down because they want to be in a productive environment, right? And then of course, if you allow people to continue at your company who lie or cheat or steal or have acted unethical, who have treated your employees or your customers disrespectfully, you're asking for trouble, right? If you allow somebody to steal and you don't immediately terminate them, you lose a lot of credibility the next time that happens with another employee. So you want to act consistently across the board. The only way to really prove that is to have that documented. So at a minimum, those once a year evaluations allow you to have some documentation in a personnel file that address the benefits and shortcomings of a particular employee. And depending upon the state, that's extremely important. State of Texas is a right to work state, as are many others, meaning you have a right to show up and work, or you have a right to walk out the door and I can't do anything about it. Likewise, I have the right to say, get out of here, you're fired, or to say you still have a job. Okay. Other states, though, aren't so clear cut, right? Especially if you work in states that have unions or in industries that have unions that you have to have collective bargaining agreements with, etc. That's not very typical in home health. As a matter of fact, I don't know of any situations in home health that are under a union agreement. But as you start working with hospitals or some larger organizations, just keep that in mind. It's not clear cut across every state, right? You can't go to New York and tell a home health agency just fire that employee, because it's a much more difficult process. But if they had built up the documentation, it becomes much easier. As a matter of fact, when we were in Dubai, a guy there said they really can't fire employees because they still have to pay for them for, I think, 3 years. Yeah, so you want to be very, very careful when you hire someone as well. Okay, that's why, like in New York or other states, it's much more difficult to hire somebody because you know it's going to be very difficult to fire them. So they go through a much longer interview process because the downside is so great. Of course, yearly we had the tax returns that we just talked about, our corporate or partnership, IRS filing, personal income taxes, state franchise taxes, your payroll reporting, and then your unemployment reporting as well. All right, every 3 years, especially if you're under like CHAP accreditation, we have to have a capital expenditures plan. So your governing body would create a 3-year projection of any large expenditures that would be required if we're going to purchase a new building, if we do extensive renovations, if we need to buy expensive equipment. In home health, I don't remember what the threshold, I think it's like $600,000 right now. So in home health, that capital expenditures plan usually says we have no capital expenditures planned for the next 3 years. Obviously, if you're dealing with a hospital, that becomes a much more problematic strategy, right? You have to, over 3 years, you're going to have a lot of expenses that cross that capital expenditures threshold. You would also want to have survey preparation. Okay, generally, home health agencies are surveyed once every 3 years. If you're CHAP accredited, you at least have some type of heads up as to when that survey is going to be conducted. If you're just under a standard license or licensed and certified state accreditation, the surveyor can walk in at any time. Okay. Generally, that happens on a 3-year basis, so you know within a few months that the surveyor is going to be coming to your office, but you don't know when. Of course, a surveyor can walk in at any time unannounced if there's been a complaint or some type of an investigation that could be happening, right? So they could walk in at any time. So we would want to have a survey preparation. It generally involves having a consultant come in, the same one who does the yearly audits, and perform a mock survey. Home health, you'll hear about mock surveys a lot. Effectively, that means a consultant comes in and pretends to be a surveyor. Okay, they act just like a surveyor. They request records just like a surveyor would. They go through and audit records, but then they sit down and tell you all of the areas that the state surveyor would cite you for deficiencies. So it's a way to, again, have a survey that doesn't that helps you without the cost associated with actually getting a deficiency. For a company like ours, you don't see this hardly ever, but I believe in the painted picture methodology that you guys see on our website. Every 3 years, we set up a strategy of what our company is going to look like 3 years in the future. Again, that's not a business requirement. I firmly believe in that process of kind of projecting what we want to look like 3 years from now. And then our yearly and quarterly strategies are based on that as kind of a reverse engineering. So if 3 years from now we want to build a home health agency on the moon, we know that very quickly we have to start building rocket ships, right? You need to step yourself back through that process.